Hi, I'm Amanda Hahn.
And I'm Matt MacFarland with Keystone CPA.
We are CPAs by day and real estate investors by night, and you might have seen us on some BiggerPockets podcasts or read some of our blogs.
We also wrote a book for BiggerPockets called The Tax Saving Strategies for the Savvy Real Estate Investor, so check it out.
We're really excited to be talking about tax saving strategies for short-term rental investors.
Yeah, this is a huge market. It's exploded over the last couple of years. I know a lot of us, invest in short-term rentals. A lot of us stay in short-term rentals. So it's a great tax savings planning opportunity area as well.
So let's start with a definition. What is short-term rentals? And that's important because, contrary to popular belief, not all properties listed on Vrbo or Airbnb are considered short-term rentals.
Yeah, now to be a short-term rental for tax purposes, the average customer use for the year needs to be 7 days or less. So what does that mean? Well, you add up the number of days that the property was used by customers, divide by the number of customers that booked, and if that's 7 days or less, you've got a short-term rental. If it's 8 or more, you've got a long-term rental. Again, regardless of whether you were booking it out on Airbnb or Vrbo or what have you, it's purely looking at 7 days or less or 8 days or more.
Yeah, and the next question that I think people ask all the time is, where is a short-term rental reported? A lot of confusion with real estate investors, and also some confusion amongst tax advisors and tax preparers as well.
Yeah, now for most short-term rentals, they're going to be reported, for your personal tax return, they're going to be reported on a Schedule E, just like any other long-term rental. The main difference as to where it would not be on Schedule E and it might go on a Schedule C, which is a sole proprietor trader business form, is if you happen to be operating your short-term rental kind of like a hotel. So if you're providing what they call hotel-type services, then the short-term rental needs to be on a Schedule C instead of a Schedule E. What are some good examples of hotel-type services?
Yeah. So hotel-type business, commonly it's, if you're doing daily cleaning, right? So even though they're still staying in the property, you're going in and changing the sheets and all that. Food and beverage, meal services. Maybe if you're doing hotel, airport pickup, drop off, that kind of stuff. But again, the vast majority of short-term rental operators are not providing those services. And so most of them are reported just like any other rental income.
Now, another question we get a lot is, what type of legal entity should I use to own my short-term rental, if anything at all?
I think, for short-term rentals and long-term rentals, we'll assume that you're not operating as a hotel. The benefit of that is that generally you don't have to pay self-employment taxes on it. And so because of that, whether it's held in your individual name or into an LLC, there's not really any tax difference because you already are protected from self-employment taxes.
Now, so even though there may not be a tax difference to whether you own your short-term rental in your personal name or in an LLC that you own 100% of, there may be, asset protection reasons you want to consider a legal entity, and that's where I would definitely recommend you talk to your asset protection attorney to figure out what's best in your situation.
Yeah, as short-term rental operator, don't forget you have a lot of tax deductions because, there's oftentimes a huge upfront cost for you to stage and furnish and do all those things. And so make sure you keep detailed tracking of all of those things, the setup costs as well, because a lot of those are tax deductible. I mean, not a lot, the majority of them, but not all, are tax deductible.
And similar to long-term rentals, you can also take depreciation expense on your short-term rentals. A lot of times the depreciation can be very similar, slightly different, useful lives, but sometimes a lot of things can actually be more accelerated with a short-term rental, going back to kind of that idea with furnishings and personal property that people tend to put more of into their properties when it's a short-term rental than a long-term rental. So you're going to have probably a lot more accelerated depreciation opportunities with a short-term rental.
Another great benefit of short-term rental investing is that if an investor meets material participation on the short-term rental property and there is a net tax loss on this property, then those losses are not limited to offsetting the rental income. It potentially can offset income from other sources as well. For example, W-2 or stock gains and things like that.
Yeah, so you could have, your one short-term rental that you are self-managing, and let's say it generates, after depreciation, you've got a $30,000 loss. And, between you and your spouse, you make $200,000. You want to be able to use that loss, obviously, to offset your other income. Now, because you're self-managing it, there's a good opportunity that you could meet the material participation standards for that rental and to be able to deduct that $30,000 against your $200,000 income. If that saved you 40% tax bracket, that could save you $12,000 in taxes just on that $30,000 loss.
Yeah, what I love about that is for the short-term rentals, all you have to do is qualify for material participation. There's 7 different ways to qualify for those. It's a lot lower threshold than real estate, long-term rentals where you have to potentially be a real estate professional to offset your higher earned income, right?
And the good thing about this is that for the material participation test, both spouses can count their time. So if both of you are, working together on getting a property up and running or helping self-manage the property, both of your time can count towards meeting that material participation standard. So it almost makes it a little bit easier just in that regard too.
Yeah, this has saved a ton of taxes for a lot of investor clients who maybe still have a W-2 job, but are also doing real estate and be able to use some of these great strategies to not just protect the rental income from taxes, but also try to shelter some of the other income as well. Thank you so much for joining us. Please make sure to like, comment, and subscribe to the BiggerPockets YouTube channel so you can keep receiving great information.
Yeah, and check out our book, Tax Saving Strategies for the Savvy Real Estate Investor. And if you'd like more information about our services, please check out KeystoneCPA.com for more tax tips and resources.